And I'm going to leave the question box open today. So if you have any questions during the presentation, if you pop them in there, I'll try to answer them. If you have questions that I can't answer, then you would just go ahead and put your name and number or your Skype username in either the chat box or the question box. And Rory from Rightline will pick that up and he'll give you a call and answer the question. And he may even answer them during the presentation on your question box. So, and again, here's his number. I'll post this at the end of the presentation. Okay, just kind of to go over the Rightline Trading, who Rightline Trading is. This is the Rightline Trading family here. The whole Rightline vision here is to develop innovative trading strategies that predict the future direction of price and use that information to provide our clients with an edge in the trading market. That's exactly what we do. And we want to build a community of traders who collaborate to share and support one another on the trading journey, all with transparency and integrity. This is me here, David Wyse. This is me in my trading room. I trade options and some stocks, but mostly options with option strategies. And I have an alert service here. This is David Kushner. He trades on NinjaTrader, and he is generally futures, but also some other commodities, etc. He trades prop accounts. If anybody wants to trade on prop accounts, that's a good place to be. This is Craig Emery. He trades futures exclusively on the NinjaTrader platform as well. And again, I'm trading off of the SPY Super System, which is a piece of software that runs on Thinkorswim. Although you don't have to trade on Thinkorswim, you can trade anywhere. And as far as the office is concerned, this is Rory. This is the name I just told you about. He would be answering any questions. He basically runs the operation down there as far as the administrative work is concerned, answering questions, working with the technical people to help folks with any kind of technical problems they have. This is Sergio Rodriguez. He has got a computer science degree in computer science, and he's the main one that installs software, makes changes, helps people with their installations, and also develops a lot of the technical information or technical indicators that you're going to see that are being used in the software. Right down here is Charles Sider. Charles is an engineer by heart. He is extremely detailed. He works on also the installations, also works on the software, and is very, very meticulous about the software and about installation. So if you have a call to the office and you get to work with him, you're going to know that when he gets done, it's going to be perfect. Brock Miller here is an intern here. He's also getting a degree in computer science, and again, he works with Charles and Rory and Sergio to firm up the technical side of the office down here. This is Mark Miller. He owns a company. I bought it just a few years ago, and has a great background in AI. And AI is a big deal now. I think everybody knows that AI is a very big deal now, and is becoming more and more critical. So a lot of the AI is getting integrated into the software, and Mark has been the pushing force behind that because that's his experience. And the company has really just made dramatic strides in the last few years under his leadership. All right, so that's who we are. That's what we're there for. This is me, and this is who you'll be listening to today. All right, this is Trustpilot. This is where we get reviews. All the different trading platforms and trading rooms are reviewed here. We have an excellent record on Trustpilot, and just to give you a little credibility here. Okay, so as we get started here, this is a graphic of the Compass, what's called the text alert service. The SPY Super System used to be called the Compass system. It's been enhanced since then, so it was changed from Compass to SPY Super System, but I still call it the Compass SMS text alert service. This is where the high probability trades that we find will be sent out to the members. And I'm on the alert service, so I can see how fast the alerts are going out when you receive them on your phone. I get mine in about 5 to 10 seconds when I send the alert out right now. Okay. Now, one thing I want to talk about first, and if you've been in my webinars, you've heard this before, but this is really important because it's important to understand what moves the market, what drives the market. And, you know, a market consists of many small retail traders, tens of millions of retail traders. such as myself and most likely everybody here. And that's these little marbles right here. And it's critical to understand that when we're trading and the institutions, which is this big marble here, are not in the market in any significant way, what you get is a lot of chop and chaos. The market basically just chops around. You just can't make any money when you don't have a direction to be able to trade. So we don't want to be in the market when the retail traders are what's making up most of that volume at that point in time. We want to avoid it, and that's what the software tells us to do. These are the institutions. Now let's talk about institutions here briefly. These are investment banks such as Goldman Sachs, Morgan Stanley, JP Morgan, HSBC. There's a lot of investment banks, big, huge investment banks. But the institutions are also made up of hedge funds, hundreds of hedge funds. All these hedge funds have tens of millions and billions of dollars to trade. Then you also have pension funds, such as police pension funds, state workers pension funds, firemen pension funds, more and more of huge amounts of money that are available for them to trade and invest. And lastly, you have mutual funds, such as Vanguard, T. Rowe Price, all the big mutual funds. All of these entities make up what would be called institutions. And our job as a trader is to find out when there's a propensity of institutions pushing a stock or an index in one direction or the other. Sometimes there isn't. Sometimes you'll have one bank pushing it long, one bank pushing it short. That's not going to do us any good. We need to have some continuity in the number of institutions that are pushing a stock one way or the other, and that's what our SpySoft super system software does. That's what it measures. All right. Now, it's also important to understand that these institutional traders, institutional entities, usually have a trading desk, which is made up of humans that are pushing buttons just like we do to make trades. Very tiny portion of the trades. Most of their trades are coming from algos, computerized programs that are written and coded to find some specific setups to trade or specific news. They read news to trade, and this is what we're fighting against. We're fighting against these algos. And if you've ever watched the market on any kind of a big announcement, like let's say the FOMC, which is coming out this coming Wednesday, all right, 2 o'clock in the afternoon. They come out with their report at exactly 2 o'clock in the afternoon. At 2 o'clock in 1 millisecond, if you watch your chart, you're going to see a huge amount of volume coming into the market, pushing the indexes either up or down. All right, no human is doing that. You can't react that quickly. These are the algos. They actually optically read the report in milliseconds, and they create trades from that. And that's what is causing these big spikes right at 2 o'clock or 8:30 on a Friday on the jobs report. We've got a jobs report Friday, 8:30, and 1 millisecond, you're going to see a big volume either up or down. That is the algos. Now the algos also have been written to identify setups that a lot of traders used to use, or just maybe still do use. MACD crossovers, RSIs, things like that, divergences, and they can identify those, and they can actually create the condition to make it look like they're occurring, and then reverse them on the retail traders. And just a kind of quick story. When I found the Spy Super System software, I was looking for it because I had noticed that the results I was getting with standard setups that I had been using for years weren't as good as they used to be. And I suspected it was probably because the algos were identifying them and trying to bust them on me. And that's when I started looking for software to identify what institutions were in the trade, and came across with Compass System at the time, now called the Spy Super System, and it made a dramatic difference in my trading win rate. I went from 80% almost to 90% just based on that. Okay, so that's what drives the market, and it's important for us to know that and to try to identify it. This is going to seem a little bit off subject here. This is ace and jack of spades, a couple $100 chips. This is a blackjack table, right? This is gambling, and what this leads into is trading stocks and options gambling. And if you've ever talked to any friends or relatives about the fact that you wanted to trade, you're probably going to get the question, it's gambling. You're just gambling. You can't beat it. That's what they're saying, all right? Well, kind of an analogy here. When I was much younger, I made my living playing blackjack in casinos as a card counter in Las Vegas. I spent a couple of years there That's all I did, and I just made money week in and week out as a card counter. Now, card counting is not as complicated as it may sound when you hear. I'm not counting the cards. I'm keeping track of the of what the makeup of the rest of the cards is left after cards are removed from the deck. And just as a quick recap here, as you remove little cards from the deck, 2, 3, 4, 5, 6s, and 7s, you have more big cards in the deck than you would normally have. That gives the player the edge, and vice versa. When the big cards are removed, that gives the house the edge. So what we did was we tracked the cards, and when the deck went in our favor, there was a lot of little cards removed. That gave me a mathematical edge over the casinos, and I would big bets. When I didn't, I just make the smallest bet. So that's what card counting is. And the reason I bring this up is trading stocks and options is very similar to that. Without knowing what the institutions are doing, the trader has no edge. So in essence, you're gambling. You've got to have an edge, and you've got to know what the institutions are doing. That's why this piece of software is such a critical piece of software. So the SPY super system, I call this is my card counting system. This is what gives me a mathematical edge over the other retail traders, right? It allows us the ability to become consistently profitable because we know when the institutions are in the trades, we trade. When they're not in the trade, we don't trade. And the SPY super system, in conjunction with identifying the best high probability trades, can lead to consistent profits. Now, when I cover the profits that we've made, what our win rate is, and how much money we make each month in the room and on the alert service, remember that is coming from the fact that we have the SPY super system software. That's what's driving this. All right. Now, in the room, we have a couple of rules to trade by. They seem fairly simple. Trade the best and skip the rest. Who doesn't want to just trade the best trades? And skipping the rest, this is a big critical component. We don't take a trade if the institutions aren't in it. And that sometimes leads us to not take a trade that looks pretty good on paper. It's really skipping the rest is really probably the most important part of this, because if you can pass on a trade that looks good but you would have been a loser, that's just as good as taking a winner. So this is what we try to do: trade the best, skip the rest. And our objective is not to make trades. Our objective is to make money. This is put here for one reason, and that is one of the biggest reasons that retail traders lose money is they overtrade. Overtrading is a killer for retail traders. They just cannot seem to sit there and watch the market when it's not conducive to making trades. They start to make up reasons to find a trade and make a trade. They can't. They just don't have any patience, and they'll make trades that they shouldn't. So again, I focus every day, and our objective is not to make trades. Our objective is to make money. That should be your objective as well, I would assume. Oh, Whitmore, probably using a lot of standard Wong high-low count or some variations. Yeah, I use the I use the Revere point count strategy, which was fairly complicated actually. I mean, you can just do it by -1 when big cards come out, +1 when little cards come out. If you want to read a book on how hard card counting became discovered, there's a book called Beat the Dealer, and the author's name was Edward O. Thorpe. He did it back in the 60s when they was first starting getting some decently strong computer systems, and did an analysis on that, and that was where it started. Okay. Again, a couple of things here. Maintaining discipline is very, very critical. And when I say maintaining discipline, this is what I mean. Know what your strategies and methodologies are, and trade those. Don't be running around looking for other strategies here, there, and everywhere that you're reading about on the web or see on social media or somebody told you about or a talking head in TV talked about. Please don't do that. And learn and follow the process, and the process I'm going to go over. This is how we find the highest probability trade setups. It's basically a checkbox situation where you're looking for elements and criteria, and when you have enough of them, you've got a high probability trade. And remaining patient. Remaining patient is very critical. We talk about this. Most retail traders just cannot remain patient. And I mean, I talk to traders all the time who are taking trades when they shouldn't be taking trades. And I ask them why. And I always hear, I think, I thought, or I saw. They saw something, they read something, they thought something. They're not taking off the price action, they're taking it off of what they think in their head. And that's dangerous, extremely dangerous. And I'm going to touch on that in just a minute. we as profitable traders need an edge. We need an edge over other retail traders. Our edges, and this is the big one, we have the SPY Super System software. We have a piece of software that identifies when institutions are in the trade and when they're not. We trade relative strength and relative weakness. Another thing that most retail traders don't understand. They think it's RSI, it's not. All relative strength and relative weakness is if I'm looking at Tesla, how is Tesla trading right now versus the S&P 500, the SPY? If Tesla's going up and the SPY is going sideways or down, I get relative strength. If Tesla's going down and the market, if Tesla's going down and the market is going up or sideways, it's got relative weakness. That's what we look for. This is really important. Then we trade with the market trend if there is one. Some days you don't get a trend, but Friday was very trending, very bullish day. So we trade with the trend. So if we have a bullish trend, we want to mostly look for long stocks. We want to try to find the best longs we can find. And lastly here, buy near support and sell near resistance. This is, you hear this all the time, but this is extremely critical because if this will avoid what's called FOMO, fear of missing out. If you wake up in the morning and you look at the market when the market opens and you see a Netflix stacking green candle after green candle after green candle, and you're sitting there watching it and you're thinking, I'm losing money, I need to get into this. You'll dive into the thing right near the high. It's way from, it's not close to any support, and you're going to get in and you're likely to get trapped in there. What you want to do in a situation like that is identify the stock, find the support level, wait for it to pull back at some support, bounce off the support, go back into the original trend and buy. Because if you're buying near support or selling near resistance, your losses are going to be much more smaller because you don't have far to go if it breaks down on you. All right, that's very important. So the compass system, or the SPY Super System as we call it now, it identifies the highest probability trade setups, while sidestepping set trades, setups that look good but will fail more often than they succeed. Skip the rest. It does by identifying when institutions are driving the move and when they're not. It does analyze some relatively complex trading data, and it displays the results in easily identifiable visual format. This is a very important thing because being able to see it, and it does it in colors, which I'll show you, you can see very simply whether the institutions are in there, whether you get a good setup or not, just by looking at the colors. And this visual element makes it possible for even new traders to find high probability trades. It's very difficult for a trader when they're starting out to be proficient at reading price action, or even understanding technical analysis. But they can certainly understand when they see what the colors are like, if institutions are in the trade or not. And that right there is going to give them a big edge. All right, and how do we get an edge over retail traders? Well, we're only taking trades that are being driven by the institutions. This is something you're going to hear over and over. Very critical. We trade stocks that have relative strength or relative weakness versus the SPY or the Qs, and we trade in the direction of the overall market trend. Those three things right there are going to put you ahead about 96% of the retail traders in the world. And how does this give us an edge? Our trade will be supported by institutional buying or selling. They'll be outperforming the SPY, and they'll be moving in the direction of the overall market. Right, so this is generally how high probability trades work for you. These are the things that are going to give you the edge over other retail trades, and they don't know what you know. They don't have the SPY Super System. They don't know if the institutions are in the trade or not. They don't understand how to trade relative strength, relative weakness. Most of them are just out there lost, trying to make trades, and they're guessing. All right, now the SPY Super System software that drives all of this, it's the critical element in finding and trading the highest probability trades. Right, the SPY Super System software is the engine that drives our exceptional results. So when you see our results, remember, it's the SPY Super System software that's allowing us to pick these trades and make money on them. And the ability to identify when institutional players are driving a bullish or bearish move, and when they're absent, that's the key factor in pinpointing high probability trade setups. And that is what the function of the SPY Super System software, and it's the critical component. And then you'll see this software, I bought it, you can buy it, you can put it on your Thinkorswim platform. You don't have to trade on Thinkorswim, but it'll run there for you, and it'll tell you what's going on. All right, just as kind of an aside here, I do a YouTube feed every day at 11 o'clock. I get on about between 11 and 11:15 for an hour, and it's Right Line Trading YouTube feed. You actually will be on YouTube. I take the room that I'm in, and you'll be just like you're inside the room. You can ask questions, you can see the charts, you can see all that information. It gives you a nice view of what's going on every day. Because like I say, I'm there all the time. I'm not talking all the time, but I'm answering questions, flipping up charts. All right. Now, one thing I just kind of put this in this today, and this is because I keep running into this all the time with traders in the room. I'm asking why they took a trade and they saw it on Wall Street Bets, or they saw it on X, or they saw it, they saw it on some social media platform they're working at, or they heard something on CNBC or Bloomberg, or they heard it from a friend that this stock was going to do something, or they read an article about it. All right. So what they're doing is they're trading on what they think, what they hear, but not what they saw. Not what their market's doing. It's coming off of social media. It's coming off of somebody else's opinion. It's rumors. It's garbage. This stock is not going to do any good. And the reason I put this in here is because this is a quote from Stephen Hawking, and this is really something to understand. The greatest the greatest enemy of knowledge is not ignorance. It's the illusion of knowledge. When you're trading off of something you see on social media, or something you heard on TV, or something some friend told you, you're trading with the illusion of knowledge. You're trading on something you don't know. You think you know it, you don't know it, and it's gonna be a killer. So again, the greatest enemy of knowledge is not ignorance, it's the illusion of knowledge. Keep that in mind, because it's every time anybody tells you why they took a trade and they tell you something that isn't based on technical analysis and institutional buying or selling, they're basically going to be in big trouble. Okay, any questions here? Nope. All right. Now I'm just going to show this quickly. This is the SPY super system on the Thinkorswim platform. I just want to identify what we're going to be looking at for indicators. And again, this is a 5-minute chart of the Qs, but it doesn't really make any difference. The key thing here that you're going to be looking at is this is the current time frame momentum, this one right here. Now, the momentums and the trend are going to be identified by 4 colors. They could be blue or green for long, for bullish, red and yellow for bearish. This is the current time frame momentum. On a 5-minute time frame, this is identifying what the momentum is currently on the 5-minute time frame. This is multi-time frame momentum. This is on 3 different time frames. This includes the 5, the 15, and the 45. It's looking at that. And this is a long-term trend. And this is more as something to confirm the direction we want to take. But these are the most important ones. Now, to understand, for swing trades, we should be looking at a daily chart, and the daily chart, multi-time frame momentum and current time frame momentum should both be either bullish or bearish. They need to be aligned. You need to have red or yellow on both of these. They don't have to both be red. One can be red, one can be yellow, but you need to have bearishness on both these multi-time frame and current time frame momentum. If you're going to go long, they need to be either blue or green on both the daily and the current time frame momentum. That's for swing trades. For intraday trades, when you're just trading off a 5-minute chart for quick type trades, you're only going to be looking at the current time frame momentum. This is what's going to tell you whether the trade or the institutions are coming in or not. This right here is telling me on the 5-minute time frame on this chart that the institutions had been selling across the board, but they were coming in on the 5 minutes. So if I was thinking of going long, I'd be waiting for this stock price, for the price on the Qs to bounce up above my resistance level, which happened to be the 15 here, and take it long. Now, up here on this section of the chart where the prices are, you have the 15 EMA right here, which is this red line, which turns different colors. That's a 15 EMA of an EMA. It's a smooth EMA. It's what we use for support or resistance on a 5-minute chart. This is the VWAP. This is the most critical line. The VWAP is called the volume weighted average price. This is a level that all the institutions use. Every institution has the VWAP on their chart, and they trade off of this. You should not be trading long if the price is below the VWAP. You should not be trading short if the price is above the VWAP. This is one of our key levels for an intraday trade to enter. If we're going to go long, we wait for it to break above the VWAP, to turn blue or green, and we take the trade. So those are the keys here. We also have these pink and blue arrows. These are called pop signals. The SPY super system produces these. These are break below or a break above compression. These are compression breaks to the downside and to the upside, and they're a big help in entering a trade. Okay, and this white line is called a pivot point. It's the only one I use. I don't use all the other pivot points. This one has been extremely effective, and this is the one we'll keep on the chart because it's very, very effective. Right, and this, by the way, is the oscillator. This is the actual Laguerre momentum oscillator. However, we do not have any divergence. It strips the divergence out of that. It's just looking at straight momentum. All right, and to understand momentum, by the way, it might be helpful to understand what momentum is. It isn't just getting price going up and stock price going up, each candle, a green candle stacking one on top of the other. What momentum actually measures is when you go from one candle to a next, is the close of this candle higher, closer to the high than the close of the previous candle. So you want the close of each candle to get closer and closer to the high of that candle. That's what momentum is. That's what we're measuring across multi-time frames and current time frame momentum. Okay, and this is, of course, the long-term trend. All right, and I'm just going to show you a couple trades here real quick, just so you can kind of get familiar with looking at the charts. But you can see here that this was SMR. We took it here. I don't know what that's doing here, but this is, we took it here. You notice that on SMR, this was earnings, and then you see how it popped here, and you notice it went current time for momentum on the daily, went from yellow, which is bearish, to a green, which is bullish. All right, so we take it right there as everything is green lined up long. We took it and we took this. We get in on 513, out on 515, 56% profit. 2,000 invested, it created $1,170 profit. I use the $2,000 invested in each trade as a baseline. That doesn't mean everybody has to do it or anybody does it, but it gives me a way to look at my results each week and each month and use a same amount of money into each trade, so that it'll give me decent results that make some sense. You can quantify them. All right, and this was a Tesla trade on the 5-minute chart. You can see here Tesla. You notice on the 5-minute, we're just using the current time frame momentum right here. You notice it went blue right at the open. So you just wait for a break, and you see how it came along the VWAP, the volume weighted average price, and then it popped right here. So you would take it right there. Everything's green. You take it right there. It moves up, and then you get a red candle. You get out. So it's a very quick trade, but it's a pretty nice move. It's about $5 on Tesla. All right. So that was what those look like. This was one on the SPY that we took. This was a 5-minute trade on the SPY. You notice that with the colors are changing back and forth. It's bullish, it's bearish, it's bullish. But see how when it went bullish right here, went from yellow to blue. You see how the stock price broke above the VWAP right there with this pop out of the box symbol, a compression break? That is the perfect entry for the SPY super system that we trade. And we trade these on 5 minutes. These are very quick trades. These are not swing trades, but we also do this in the room. And we identify them when we see the setups. And this, of course, the software will show that to you. So you can see the nice move we made here. And here's where you get out as it starts to pull back. So you made a nice profit in this. When you get into it, the VWAP becomes your stop. And then once the price gets moved away from the VWAP, then your 15 becomes your stop. But you're basically, as the momentum may fade, you're going to take profits right there. All right, and this is Wendy's. This was an overnight trade on the daily chart. This was earnings. See the breakdown right here, coming down off the daily chart right there. Breaks down. See how everything's red. Take it right there. We just took it overnight and took profits in that. But I just want you to kind of see the structure of the chart itself. Can I elaborate on the dots? Usually green in this example. These dots, these are called trend dots. I'm going to take these off the charts. These don't mean anything. These dots here, however, these bigger dots, these are called acceleration dots. And when you see acceleration dots underneath the candlestick, like that, if they're green, that means the momentum is about as max as it can get, or it's moving in direction to maximize it. So anytime you see green dots, you've got very high momentum. The momentum's increasing. As it gets up to the max right here, you notice the dots stay green. So you still get good momentum. If it was momentum in the other direction, they'd be red. If the momentum is way down here, they'd have red. You'd have red candles with red dots underneath them. Okay. Okay, let's move along here. Now, this is just something I threw in. This is just a little humor. These are traders, most retail traders who don't have any idea what the institutions are doing. They grab in and they take FOMO. They jump into a trade in the morning. They find out it reverses on them as soon as they get into the trade, and now they're freaking out. They don't know what to do. Their support's so far away, they're just losing money. This is why most retail traders lose money. I mean, they just don't have patience. This is somebody without patience, without the SPY super system to tell them if the institutions are in, and you're not understanding technical analysis. All right, this is somebody who does understand technical analysis and is running the SPY super system and knows when institutions are in the trade and when they're not. The ability to have tools that you can feel comfortable with, you can feel are going to give you an edge. One of the things it does for you that might be overlooked is it builds confidence. You have confidence in your trades. And if you've got confidence in your trades, you're going to be a lot more successful trader than somebody who gets into a trade and has no idea whether it's going to work or not. They've got no reason to believe it. They think it's going to do this, but as soon as it doesn't do exactly what they think it's going to do, they start freaking out. They get a red candle on a 5-minute chart. They bail on the trade even though they shouldn't. They don't have confidence, and that's one of the things that these software does for you. Is going to give you the confidence to stay in these trades. All right, so this is process precedes results. Okay, this is kind of important. Process before profits. What that means is, don't be looking at your P&L and trying to decide if you've made a good trade or not based on what the P&L is telling you. The whole way to do this is you've got to learn the high probability criteria and strategies. That's got to come before focusing on results. The results will come once you've learned the proper strategies and the proper methodologies. If you focus on your P&Ls without having a solid process to follow, it's going to end in failure. Because you can have a very good trade that you lose money on. It happens all the time. And you can take a horrible, horrible trade and make money on it. And you're going to think that was a good trade. It was not a good trade. If you take 100 of them, you're going to lose money. But that's why it's important to follow this and don't look at your P&L. I recommend not even looking at your P&L during the day at all, because you're gonna, as soon as you start looking at your P&L, you're instilling emotion into your trading. And when you start instilling emotion into your trading, what you're going to do is you're going to start making mistakes. You're going to exit when you shouldn't. You're going to stay in when you shouldn't. You're focusing on how much money you've made. As an example, if somebody is in a trade and it goes up and they're up $300, and then it comes back down and all of a sudden they're down $150 on it, and then it comes back up again and it's up 100, and then it drops down where it's only up 50, they're very likely, human nature, it means they're relieved now because they're even again, they're going to bail on the trade. Not because it's technically should have bailed on it. They're bailing on it because they're relieved that they're not down money anymore. Emotion has driven them out of a trade that they probably should have been adding to right then. Okay. And this is just the OODA loop. I've just got this in for informational. Some people are interested in it, some people aren't. It's called observe, orient, decide, and act. This is basically the thought process you go through when you're looking to find a trade. You use your scans, watch list, and news to identify prospects. Then you orient. Orient means identify whether the prospect meets the high probability criteria on the daily and 5-minute chart. Then you look for support and resistance levels. Know the earnings date. You don't want to trade over earnings. And check the option chain for pertinent information, expiration dates, etc. So you've observed, then you orient. Now when you're oriented and it looks good, then you make a decision. Make a decision on whether this trade qualifies as a good high probability trade, set up and trade it, right? And then act. Make the trade. Try to avoid analysis paralysis. That's called the OODA loop. It's basically just kind of a way to force yourself to go through a logical process, a thought process to take trades. All right, so here is the basic high probability trade up funnel that we use. This is obviously virtual. This is the thought process I go through. First thing I do when I look at a trade is I look at the daily chart, and then I'll look at the 5-minute chart. But the daily chart's important. I'm not going to trade a stock long if the daily chart's not bullish, and I'm not going to trade a stock short if the daily chart's not bearish. Right? So I look at that. If I've got a stock that I like bullish when I look at it, and then I look at the daily chart and it's not bullish, I'm done with it. I'm not going to look at it. Then I trade with the trend, both the stock and the market. I want to see if the market's moving up today. Is this stock moving up today? Is this stock in a good trend? Right. So that's the next thing. Now this is the breaker right here. The SPY super system must align. If you're going to take a stock long, The SPY super system must be bullish. It must be green or blue for swing trade on both the multi-time frame and current time frame momentum. I'm going to show you a bunch of these. Then once that meets it, then you look for stock with relative strength and relative weakness. Maybe you find 4 stocks that meet these criteria. Find the one that's got the best relative strength for long and best relative weakness for short. Then try to enter near support or sell near resistance. That's the key element right there. They come out near the bottom, you've got some good trades, pick the best one. Well, this is what you think is the best one. And this is the same thing, just written out. And again, when you get the recording of this video, you can go back over these things to try to maybe internalize them a little bit. But the SPY super system indicators must align in the direction of the trade. This is the one thing that comes first. And the stock to be traded should have a daily and 5-minute chart aligned. The daily chart needs to be bullish if you're going long, has to be. Okay? And these are the strategies that we use in the room. So we use straight calls and straight puts. I do straddles and strangles. These are non-directional option trades. And I have videos on all of this stuff. A debit spreads using weekly options expiration. Did some of these this week. Did a couple of straddles and strangles this week. I do time spreads over earnings. This is a non-directional trade that we capture the volatility crush when earnings come out. Gary, can I explain why the daily and 5-minute chart should match? Well, what I mean by that, Gary, is if you look at a chart and it looks bullish on the daily chart and you want to get into it, then switch to your 5-minute chart and try to find an entry point where the stock comes down, bounces off support, and then turns bullish again. You don't want to chase it up, but you want to get your best entry on that daily chart. When the daily chart confirms what you want, make sure the 5-minute chart, don't take it when it's falling below the VWAP and coming down. Wait for it to bounce and head back up again. That's what that means. All right. These time spreads, by the way, I do over earnings. We did one yesterday on CNC. We made 37% on it. Basically, all we're doing is looking for the stock to have its volatility drained out of it when the earnings come out, because the market makers jack up the price on premiums just before earnings because they don't know what way the stock's going to go. They don't know how far it's going to go. And we take advantage of that with what's called a time spread over earnings. It's actually a calendar spread. We sell this week's calls and we buy next week's calls, and that way we capture the volatility crush. We had 2 really nice ones this week on MBLY, and we had one on CNC. Weekly ATM strategy, haven't been able to use this much lately, but this is a strategy on a neutral to bullish stock where we sell puts each week against for a long stock. It's a bullish stock. We sell puts each week to capture premium, while at the same time having a longer dated or further out in time long put at a lower strike price to protect us in case the stock starts to pull back. And we do credit spreads to capture premium over a few weeks. And we also do the SPY super system, which is trading the indexes, the SPY, the Qs, the IWM on the 5-minute chart. These are really quick trades. I can't post these, and these are not included on the room results. I separate them because any results I've got for these are trades that I took, because I can't alert on them, but I do mention them when I see them. And I have a lot of traders doing this now because they love to trade these. It gives them a chance to trade a lot of trades during the day, but still based on the SPY super system setups using the institutions. Okay, let's move ahead here. Now the alert service itself, this is obviously designed for day trades and short-term swing trades. This is not an investment strategy. This is for, most of the trades will be day trades, maybe several hours or overnight, or 2 or 3 weeks. Just depends on the trade. One thing to understand is if you're a trader who's under PDT rules, which is called a pattern day trader, that means because you don't have enough money in your account, you can only trade 3 intraday trades in a 5-day period. Every trade that I send an alert out on, is based on the daily chart, which means if you don't close it out that day, you still get an extremely good chance of making money if you hold it overnight, because it was designed to be a swing trade when I first took it, for the most part. I mean, I'll take trades and get out of them during the day, but I'm not taking a trade along intraday that I may be going to swing that doesn't have a bullish daily chart, which means to hold on to it for a while is probably going to work well. Okay, this is designed for traders who can't watch the market all day, obviously. and real-time alerts on the highest probability trade setups. That's what you'll get. You don't get as many alerts as trades we take in the room. We take more trades in the room because I'm in and out of trades more quickly in there sometimes. But anything that goes out an alert, I want to give you time to be able to get in, and then you'll get an alert on when to get out. And the highest probability trades are identified by institutional involvement, obviously, market internals, and technical analysis. And I'm trying to use some AI to integrate this market internals into the actual trading platform. Right now, I look at the internals and I can tell you what the market's doing and what it's not doing. But I'm going to try to add that. I think it'll give us even a bigger edge. All right, now this is my equity curve. It's just how much money we made. Fourth quarter, the first quarter of last quarter 2024, first quarter 2025. The key here is listen, it depends on how much you're trading, how much money you're putting into trades, but this was it's a pretty good equity curve. This is what you want to see, and this is typically what you'll see regardless of what the money is. That's all you care about. Depends on how much you're trading, obviously. All right, we're going to talk about Heiken-Ashi candles here. I'm going to spend a little bit of time on this, and this is something I think that will help you trade. All right, so using Heiken-Ashi candles with the SPY super system. All right, here's a chart, and these will look like just regular candles. It happens to be British pound, Japanese yen. Doesn't matter. It could be anything. It could be Tesla. It could be Microsoft. It could be gold. It could be anything. But what we're interested in here is the structure of the candles. Now, these are Heiken-Ashi candles. This chart is made up of Heiken-Ashi candles. Here's the two key things to understand, the two most important things. Bearish Heiken-Ashi candles have flat tops, all right? They don't have any wicks on them. Flat top, flat top, flat top, flat top. These are extremely bearish Heiken-Ashi candles. That's how you know a Heiken-Ashi candle, all right? These are bullish Heiken-Ashi candles. Flat bottom, flat bottom, flat bottom, flat bottom. That's a Heiken-Ashi candle to the bullish side, right? So what we're really looking for on Heiken-Ashi candles is we're trying to get into a trade fairly early. So what we're looking for is what's called a Heiken-Ashi reversal. A Heiken-Ashi reversal is a situation where you have a trend, this one direction, like bearish. This is obviously a Heiken-Ashi bearish trend right here. You can see how easy it is to see the trend. Now, when it gets down here, you notice we'll start getting wicks and tails on the candlesticks, and then we get a flat bottom candle right here, right? So that's a Heiken-Ashi reversal to the bullish side. We went from flat tops to flat bottom. But here's one caveat, and I need to point this out. When you have a trend that's really strong to the downside like this, and you get a Heiken-Ashi reversal that's reversing up, this is not a good Heiken-Ashi reversal because it's not a big enough candle. You've got an awful lot of momentum coming down here. You want your momentum to the upside to be at least as strong as the momentum to the downside was. So I wouldn't take this. Now, it would have worked. You could have got in here, you got a flat bottom, get some wicks and tails, and you would have had to get out up here. So you would have made a little bit of money. But this is what I'm waiting for. We come back down again, Heiken-Ashi reversal to the bearish side, and then here's our Heiken-Ashi reversal to the upside, the bullish Heiken-Ashi reversal. See the size of this candle? See how this overwhelms the bearishness here? This is an excellent Heiken-Ashi reversal candle right there. That's the one you want to take. You get a flat bottom, flat bottom, flat bottom. See how easy it is to see this trend? It's coming up. Now you start to get wicks and tails, but they're still nice and green with more flat bottoms, flat bottom, flat bottom, flat bottom up here. And then you get a point where you want to get up. You got a red candle with wicks and tails. And when you've got a wick and a tail like this on a bullish Heiken-Ashi candle, and then you get another Heiken-Ashi bearish candle, this is considered a Heiken-Ashi continuation. It's a continuation. This isn't a reversal, it's a continuation. This is a reversal. And you notice, by the way, the candlesticks start in the middle of the previous candlestick. They always start in the middle of the previous candlestick because of the way Heiken-Ashi candles are constructed, right? Always start in the middle of the previous candle, all right? So that's kind of what the Heiken-Ashi candles look like. Now, again, I'm trying to drum this in. Bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat top. Bullish Heiken-Ashi reversals are identified by flat top Heiken-Ashi candles, followed by flat bottomed Heiken-Ashi candles. This is a great way to determine if you're getting a reversal and if it's confirmed. One of the key points about Heiken-Ashi reversals are when you get a Heiken-Ashi reversal candle, goes from a flat top to a flat bottom, because of the way they're constructed, there's going to be two candles making up that Heiken-Ashi candle. It inherently is confirmation of the reversal back into the trend, right? That's important. And then, of course, bearish Heiken-Ashi reversals are identified by flat bottom Heiken-Ashi candles, followed by flat top candles. All right? Now, if you have not used Heiken-Ashi candles in your technical analysis, you may want to try using them to improve your trading. They helped me. They helped me a lot when I started using these things. I'm not going to go over all of this stuff. We'll just cover it in a little bit recap in a minute. But I did leave this in here because this is something I did on Reddit a few years ago. You can read through it when you get the recap. Okay. All right. So Heiken-Ashi candles evolved from Japanese candlesticks. They combine the open close data from the previous period with the open high low close data from the current period. That's how the candle's created. That's why they always start in the middle of the previous candle. And again, the fusion minimizes market noise, providing a clearer depiction of trend. That's why this season is so important. You can see the trends much easier with Heiken-Ashi candles. Again, it does excel at identifying trends and reversals in classical technical analysis patterns. All right. And again, we're just covering what we just covered a minute ago. Flat bottom candles in an uptrend signal strong visual of current strength. See how strong it is? Here's this very similar to what we just looked at a while ago. These are Heiken-Ashi candles. That's a downtrend on Heiken-Ashi candles. Here's your Heiken-Ashi reversal. Now, if you were looking, for example, say this was the VWAP right in here, and you get your Heiken-Ashi reversal candle right here, and it goes up through the VWAP, that would be a breakthrough Heiken-Ashi through a break of Heiken-Ashi through the VWAP. It's confirmed that it's going back into the trend because it's a Heiken-Ashi candle. And if you looked at your SPY super system and it was telling you green or blue, this would be an ideal entry for a trade right there. And you notice it goes up, flat bottom, you get a little bit of sideways movement, but it hasn't broken below your VWAP, and then it just keeps on going up again. And the trend is very, very easy to see until you get to the top. We start getting wicks and tails, and here you're out. There's a bearish Heiken-Ashi reversal. You exit the trade, beautiful trade, all right? So I don't have to read all of this. Basically, we just talked about that. And again, these are just tips for using Heiken-Ashi candles. These apply to any kind of trade that you're taking, right? Look for the nearby support or resistance to impact your potential gains. If you're in a trade and the daily chart is the stock price is 20 cents below the 200-day moving average on the daily chart, you don't want to go long. The resistance is way too close. Align the trade with the current market trend, obviously. Relative strength, choose those stocks. Monitor Bollinger Bands. You don't have to do this, but this is Bollinger Bands tell me when we're getting compression break. And those pop out of the box signals that I show you are Bollinger Bands that have switched to being expanding. So that's why that's a break of compression. And after I enter the trade to switch to standard candles, I actually don't do this until I'm getting ready to get out of the trade. When I'm getting ready to exit the trade for profit, for example, I'm going to switch to standard candles so I can catch the reversal more quickly. I don't really want to stay in it any longer. So as soon as I get a little bit of loss of momentum, even though it might continue on up, I'm going to take profits right here. All right. So again, here's the distinction of the Heiken-Ashi candles. Bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi have flat tops. All right, we went over this. Heiken-Ashi reversals are identified by flat tops, followed by flat bottoms, and bearish reversals are identified by flat bottoms, followed by flat tops. It's not that complicated once you get Heiken-Ashi candles. And you can, any chart, you can change from a regular candlestick to Heiken-Ashi candlesticks back and forth anytime you want. All right. So the recap, the advantage of the Heiken-Ashi candles, it smooths out price action, reducing noise. It makes identifying trends much easier. Improves identifying confirmation of trends or trend reversals. This is very important. You can identify trend reversal and confirm it by using a Heiken-Ashi candle. And again, it helps identify potential exits when the candle's body shrink or reversal occurs. All right. Now I'm going to show you a couple of charts, and I'm going to go to some live charts to show you some real Heiken-Ashi candlesticks setups from yesterday. All right, so this is Uber. This is my TC2000 chart. This is a program I use for charting. I use my compass, the SPY super system on Thinkorswim. I'll show you some of those, but this is just makes it a little more obvious. Here's Uber on a regular candlesticks, and you can see here on May 1st, see the gap up, Nice move here in Uber. Right, so these are regular candles. So let's go to Heiken-Ashi candles on May 1st. Here it is right here. See the Heiken-Ashi reversal right here? Flat bottom, flat tops, flat bottom right here. That's the Heiken-Ashi reversal candle. This is where you would be taking the trade long. Take the trade long right there. Now notice there's no gaps that show up in these Heiken-Ashi candles. Heiken-Ashi candles don't have gaps. So if you got in here on May 1st, which was right here, right there, you get in right there, this is where you would take it. And you would have taken it all the way up here, probably till around here, and then start to get out somewhere around the 10th of May. Beautiful trade in Uber based on Heiken-Ashi reversals. And you can see the nice, how smooth that is to see, as opposed to the choppiness in here. Okay. All right. So I'm going to look at some Heiken-Ashi reversals from Friday. A couple things I'm going to bring up here first. I'm going to bring up this. This is the SPY super system here. What used to be the compass system. This is what my chart looks like in the room every day. Here's the SPY super system. Here's our current time frame momentum. There's our multi-time frame momentum. There's our long-term trend. You can see VWAP isn't showing up here because it's further away. It's way down here because the SPY was very bullish. This is the ES. All right, but I'm going to look at a couple of charts that I want to look at. I want to look at Monster. This is Monster from Friday. Okay, so let's switch over to a daily chart because this is when I'm going to swing. So I look at Monster from Friday. See what it looks like here? Right, so it shows up as a Heiken-Ashi reversal. Let me switch the Heiken-Ashi candles here. All right, so here's the Heiken-Ashi reversal candle right here. See the wicks and tails? See the flat bottom? But notice something here. Do I want to take this long? I don't want to take it long. You see this? My multi-time frame momentum is red on the daily chart. My current time frame momentum is green, but my multi-time frame is still showing red. So I can't take this trade long yet. I might be able to take it on Tuesday, but I can't take it long right now. All right, so that's Monster. Let's take a look at ARES. This is another one. All right, so here's ARES. Here's a Heiken-Ashi reversal right here. See, it's coming down. You see the wicks, the bottoms here, flat bottom. That's a Heiken-Ashi reversal. See what we've got across the board here? Green across the board. This is a beautiful trade for Monday for a long, right? Based on the Heiken-Ashi reversal candle right there, and the fact that the institutions are in this trade. That's important. So I've got a Heiken-Ashi reversal with institutions in the trade. All right, very important. Let me try one more. Ryder. Okay, here's Ryder. Another Heiken-Ashi reversal right here. At earnings, Heiken-Ashi reversal. Beautiful candle right here. Here is blue. That's bullish. Green bullish. Trend bullish. I can take this. This is a nice long trade right there for Ryder. So that's another good setup for Monday. All right, RJF. One more. Heiken-Ashi reversal. See this got a tail on it? Heiken-Ashi reversal right here. All green across the board. Another beautiful long setup that's good you can look at. You'd have to look at other technicals to look at your daily for resistance and support levels, but this is a good trade for RJF. And I'll do one more. Walmart. Walmart breaking out on a Heiken-Ashi reversal. Is this tradable? No, I can't swing this. Notice this. Current multi-time frame momentum is yellow. Current time frame momentum is blue. Bullish to the current time frame momentum on the daily, but this is the 1 day, the 3 day, the 9 day. This is telling me I'm not bullish enough yet to take the trade, so I don't take that one. Right. So those are some examples of that on the daily chart. Now let me just switch this over to the 5 minutes so I can show you some SPY trades on Friday off a 5 minute chart. All right. So let's go back. So here's Friday. Here's the market open right here. Right, gapped up a little bit. Now you notice that here's our current time for momentum. Now this is the only one we're looking at for 5 minute trades right here. All right, you see how it went green right there, and it went above the VWAP right there. See the pop out of the box symbol. This is green. We don't care about this right now. We take it right there. That's a SPY trade right there. And these are Heiken-Ashi candles. All right, you notice we've got a Heiken-Ashi reversal right there. We can take it there. We ride it up. We take it off right up here. This is where we made money on this thing, and we get out. All right, so that's looking at using Heiken-Ashi candles. Now, if I go to regular candles on this, it's also going to look pretty fine. There's your break right there. Now you get in here as it goes to blue green, and now you had it pull back, but it stayed above the VWAP on the close. Then you just ride it up. So that was one trade you could take. We go back and look some more. Notice you have yellow here, bearish, switches to blue, bullish, take it right there. As it pops up off of the 15 EMA, you ride this thing up a little bit. And I had a couple of good trades on this on Friday. Notice it's staying green the whole time here. You could actually just stay right in this thing if you wanted to, as long as it stays green. And here it goes to yellow, so you would get out here on this yellow. But that's a nice trade. So that's what you're looking for. All right. And here's a breakdown a little bit. You see how it went from green to orange to yellow, breaking down below the 15 right there. You could theoretically take that short, but would you? On a day when the market's been going up all day long, I wouldn't touch it. I wouldn't touch it short, even though it's set up short. You have to have market context. You've got to know if you want to trade with the market trend. The market trend was bullish. You'd be waiting for another entry to get bullish if you were going to do this. And that didn't occur. So you wouldn't be shorting it on a strong day like today. All right, so that's the SPY. So that's how you can use Heiken-Ashi reversals on the 5-minute chart, or the SPY super system on a 5-minute chart to do your trades for intraday trades. Let's see. Okay. All right. So that's that. Now I do want to show you one thing here. One of the charts I use is the TC2000. I use this for my charting and for my daily charts. But I'll show you over here a couple of things. Let's look at a couple of bearish trades. This MLBY. Say this is a daily chart right here. Okay, this is the daily chart. If I go to Heiken-Ashi candlestick setups, here's Heiken-Ashi right here on MBLY. See the Heiken-Ashi reversal here and it's short, and now it's kind of compressing. Now we just got a big Heiken-Ashi reversal candle on Friday. This is an entry. This could be an entry for MBLY. If I look at the actual daily chart, it's right here. This is the 100-day moving average, this blue line that I keep on here. That's the breakdown right there. All right, so that's what I would look for. Now, if I wanted to trade it, I would have to go over here, and I have to go to the daily chart on SPY super system, put in MBLY, and look at what it looks like. Can I go short? I certainly can. We've got trend bearish, we've got multi-time frame bearish, we get current time frame very bearish. So yes, this can be traded short on Monday if it opens red. You wouldn't trade it short if it opens green. All right, and then one other to look at would be DG. Right there, obviously another bearish setup right here, red and yellow across the board, another good setup on DG. All right, so that's what I do. And during the day, I actually slide this TC2000 chart over when I'm looking at support and resistance levels, because it's too busy to have all those on the Thinkorswim platform. So this is DG right here, this Dollar General from Friday. See how it broke down? It has a Heiken-Ashi reversal candle. If I go to Heiken-Ashi right here, see the Heiken-Ashi reversal candle right there. Wick, flat bottom, flat top for a bearish one. I know where my support resistance level is. I just go over here and look. This is another good setup for short on Monday. All right, DG. And I do this all the time during the day when we're educating, is when somebody has a chart, I'll show you the compass system, and I'll show you my SPY super system. I'll show you my TC2000 as well as the SPY super system to identify support and resistance levels. All right. Okay. So let's get back to the presentation. All right. So those are some Heiken-Ashi systems. Now, I'm going to show you the results from the room. Now, I'm not going to show them everything. I'm just going to run through these, but I want you to pick up a couple of things from this. This was a 2023 trade results. And this is saying investing $2,000 in every trade. It doesn't mean that's what you're going to do. It doesn't mean I didn't do that. I change the amount I put into a trade based on the market conditions, but I have to have something to quantify what our results are. So investing $2,000 in each trade in 2023 produced a profit of a little over $60,000. In 2024, investing $2,000 in each trade produced about $55,000. And the difference is going to be, if the market's trending, you're going to be able to make more profits. If it's choppy, you're going to make less profits. But all in all, it's very, very consistent, as you can see. And one thing I want to note here, this was a kind of a really, really proud moment for our room. Well, back in April, when they put the tariffs on and then paused the tariffs, market was going crazy. The SPY was down over 10% in 2 days. 2 days, 10% of the market value was gone. We were in 4 trades. These are the only 4 trades we were in. We were in Broadcom or ABGO short. We get in for $75 a contract. We close it for $1.04 a contract, 39% profit. 2,000 invested produced 754 bucks. 328, we get into Nike at the same time. We were short Nike. This was a massive, massive win for us. Remember when the tariffs came out, Nike makes most of their product in Vietnam, and they were talking about a 38% tariff in Vietnam. We entered that Nike trade at 285 on a 328, and we exited for $9 about 3 days later, 216% profit. 2,000 invested in that produced $4,300 in profit. Again, our best trade of the year. This was Sept, another one we were short. We were short all of these. Entered for 450, closed for 8. This is more normal, but 78% profit. That's still pretty high. That produced 1,400, and NNE entered for $1.80, closed for 225. 25% profit. Invested 2,000 in it, produced 495. Those are the only 4 trades we had on during that period of time. All bearish, and that's how we did. Again, high probability trades. Trade the best, skip the rest. This is what we're able to do. All right, so this is our current June and July. I want to bring these up first. I was on vacation for about 2 weeks in June, so we don't have a very big trade count in June. But these are our June results. Now, the thing I want you to understand here is these percentages that we gain. This is typically what you're going to see. I'm not telling you that any trades we make are going to make 200, 300, 400, 800, 1,000% that you may hear from people. And I'm also going to show you that we have losses. Nobody has all wins, believe me. So this was our June month right here. But 20%, 23%, 25%, 33, 23, 42, 25. This is July so far. July has been a very, very good month for us. Very, very good. VRT here, we get 40% in VRT. Hood 25%. So you can see the percentages. The CNC here we made 52%. CNC, this was the time spread we just did on Thursday. Took it on to Friday, made 36%. We took a SPY overnight trade based on the market internals, made 77% on the 22nd. ISRT 40%. We lost 14% on snow, and we lost 7% on AA. This was a time spread that didn't work. But these are our current numbers. These are all the trades we've had for the month. In June, we had 10 wins and 1 loss. So again, 90% win rate, 3,790 in profits. July to date, this is right through Friday, 23 wins and 3 losses. 2 open trades. We got a trade on Dell long and NVIDIA long right now. So we get 2 open trades. 2,000 invested in each trade has produced $9,884 in profits to date this month so far. So there's about 10,000, about almost 13.5 in profits in the last 6 or 7 weeks. But this is a very good spell for us right now. I mean, this is the win rate we usually have, but these are pretty good numbers right here. All right, now if I go back to January 2024, I'm just going to zip through some of these results so you can see. But I want you to see the consistency in the percentage gains here. All right, this is January 2024, 20 and 2, 90% win rate. All right, again, we netted 75.05. We had a big win here in Boeing. We had a big loss in Gilead, 100% loss in Gilead, but 65% in Mara. Couple of Vertex trades, but you can see the percentages. They stick right around those same percentages. February, another really good month in 2024, but you can see the percentages. Not much change in the percentages. AMD 80% was pretty good. 24 wins, 2 losses, 92% win rate. In the alerted trades, I don't break these out all the time, but we had 20 wins and 2 losses on the alerts. These went out, and that was 6,930 in profits. All right, so those are percentage gains you can expect. This was February. This was May. I'm just kind of skipping around here. We had 11 winning months, 1 losing month in 2024. I'll show you the losing month in a minute. This was May. Pretty nice win again. 88% win rate. June, 86% win rate. July, 85% win rate. August, 89% win rate. Not a lot of trades. And September, I'm only losing month. 62% win rate. A disgraceful win rate for me. Really, probably one of the lowest win rates I've had in years. But that was just the way it was. You're going to have some variations in these things, and you're going to have to take some losses. We took some losses, but again, we only lost $1,786 in the room, and we only lost $295 on the alert service. And if you look at August, we had 4,300 winning there, and 1,700 lost here. And then right back in October, we came back with a 85% win rate, 17 wins and 3 losses, but $7,448 profits. Really nice profits here. You know, we had 61% in Lunar, 57% in Twilio, 41% in Timas, 62% in SMCI. These produced some really, really nice profits in October. November, again, 88% win rate. And this is January through April of this year. Just to kind of bring it up to date, I'm not going to list every trade, but 84% win rate in January, 89% win rate in February, 3,100 profit, 3,800 profit, 7,800 profit in March, 83% win rate, 54% profit in April, 85% win rate. So those are our results. And again, these results are due to the fact that we have the SPY super system telling us when institutions are in the trade and when they're not. All right. Now, just to kind of go over what you're going to see when you get an alert, you're going to get the first alert on Nike that would have been, has the date, it has the stock symbol, Nike. It's going to say to buy April 11th, 67 puts. April 11th is your expiration date, 67 is your strike price, how much to pay for it was $285. That would have been the whole first alert. The second alert would have said this and would have said sell order for $9. And then finally when they were sold for $9 on April 3rd. All right, that's what the alert service looks like. You get the stock symbol, the strike price, expiration date, and what to pay for the options. How do we achieve such stunning results? You kind of know already how we do that. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. So we only take trades when both of these are in our favor, but not 100% true. I'll take trades when the institutions are in the trade if the market internals are at least neutral. If they're against me, I won't take it. But if the market internals, when I say that, that's the total amount of volume on up trades versus minus the total amount of volume on down trades, cumulative volume index to tell me if we've got bullish volume or bearish volume. As long as it's neutral, I'll put bullish, will go long. Neutral to bearish, I'll go short. All right, and again, the SPY super system identifies when institutions are creating a trend. We do triple screen assessment on multi-time frame. On momentum, this is the key one for me. This is the one that makes the biggest difference of all. We also do it on trend, and there is some money flow calculations in there. All right, so again, here's the chart. I already showed you this. If you get the SPY super system, you get this template, which has all this indicators on it, or it'll also comes with this one, and you can flip them back and forth. This is the new template for SPY super system methodology trades. These are for trades when you're only trading off the 5-minute chart. All you need is the current time frame momentum indicator, and your indicators up here. Your VWAP, your 15 EMA, and your pop out of the box symbols. That's all you need to trade the SPY, the Q, the IWM, the ES, the NQ, anything that you happen to trade off of a 5-minute chart. Right? Tim, what kind of support for a guy who has never traded options? Yeah, I think I have a whole video on basic options trading. I'll be very specific about them. I think some of the trades, what I would recommend is to just trade with one contract off of the high probability trade setups that we post, send out on alerts, and go through the videos to try to learn them. Basically, you're not going to want to try to trade something that you don't understand. I would recommend against trading something you don't understand. But learning about options takes a little bit of time. It really does. You have to be in the room all day to get those results. Well, not really. If you're on the alert service also gets a lot of those trades. So the alert service numbers I showed you would be just on alerts, which means you can just take them on your phone and put the trades in. Can you day trade the NQ and ES on a smaller time frame? Yeah, you can, Arthur. I mean, if you want to, you can trade it on a 1 minute. You can also trade the ES, the NQ on Ninja Trader with a program that they have called the Money Flow Tracker, and that typically runs on Ninja, and that's for trading futures, and it's going to run on some faster time frames. So they use Unirenko charts or range charts, but I'm just sticking to 5 minutes. You can use 1 minute over here if you want to, 1 minute, 2 minute. I use 5 minute in daily, but I trade all my SPY super system off the 5 minute, but you can trade off the 1 if you want to. Okay, so there's the other templates you get. You can flip them back and forth. This is the one you use for your swing trades. And I mean, I use this one for my SPY Super System trade too, because I'm just looking at this. Okay, so this is a couple of trades. This is a SPY Super System trade. And I'm going to show you the SPY Super System trade methodology where I'm trading off of a 5-minute chart here. These are quick trades, right? So this was the SPY Super System Heiken-Ashi reversal entry right there, right there. Weak in a tail, flat top. Take it here is the 15 right there, little red line. All you have to do is stay in this trade as long as the stock stays below the 15 right there, right? When it starts to reverse back again, you would get out. But this was a trade on the triple Qs we made really good money on back in February. And again, see how this, when we took it, it went from buying green to selling yellow right there with a breakdown. Now these are just, I'm going to just run through these quickly. These are SPY Super System results. These are not swing trades. These are intraday quick trades that I took. These are the trades that I took. These are not necessarily what the results you're going to have because I can't post these or call them out. But I want you to understand people who like to trade these, they take the SPY Super System and they trade them themselves off the 5-minute chart generally. And these are the results that I had. I got a lot of traders who did a lot better than me. I have traders that do a lot worse than I did. But this was what I did in July 16-0. August 56, 6 and 2. See, the number of trades is huge because some days you can get 5 or 6 SPY Super System trades. They only last anywhere from 1 to 5 or 6 candles maximum, right? So we have nice profits here. You can see the profits, and I'll have to go over each slide. It's produced a winning. It's produced profits for me every single month I've used it so far. October 33 and 4. And again, with the SPY Super System, you're only going to have one trade on at a time, and they'll be very short duration trades. So I'll trade these during the day if we get a choppy market and I can't really find anything to trade for swing. I'll take some of these and I'll let you know what I'm taking, or I'll take an intraday trade off of these. But it's not this is all I do. A lot of traders, this is all they do because they're so successful at it. But I use this just as a kind of a fill-in for when I'm actually going over SPY Super System trades for swinging them. All right, this was November, this was December. You can see the number of trades here, 69 and 15. That's a lot of losses, but still $10,000 profit. So this is October and November, October, November, December. I want you to, the whole point of this slide is to let you know that the SPY Super System trade, which is trading off the 5-minute candlestick, off the SPY, the Qs, the IWM, these results here are not included in these results here. These are completely separate. If you were in the room and you followed my trades, you would be able to, this is about what you would have made. You would have made just about the same as I did. You know, it's going to vary a little bit, obviously, but you would have had this. For the SPY Super System trades for October, these are my results. I can't tell you that these are the results you would have had because I can't post these or even or alert on them. All I can do is tell you them. I see a good trade, I'm going to take it. But I can't tell you. You have to be managing your own in and out of these trades. All right. So that was October. That was November, 9,300. Big month in November on the SPY Super System. A lot of it depends on the market, of course. And this is what you would have made in the room in November if you had taken all the trades, 14 and 2. Not a lot of trades. And there's December. All right. So again, these are completely separate from this. This does not include this. This does not include that. These are separate trading methodologies. This is more of a swing type, long-term intraday trade that I can post and I can send alerts out on. Okay. And this is a recap of October, November, December, just to show you what we did, what I did in the SPY Super System right here, and what the room did on the October, November, December of 24. Just so you can see the difference between these two methodologies. All right, I got a question here. One more. Most of my 5-minute trades entry when the 15-period average gets breached. Well, it depends on the stock action for that day. It'll either be the 15 or it'll be the VWAP. I actually prefer the VWAP. The VWAP is I think is a stronger support or resistance level to use, Steve. When the institutions push something up through the VWAP, usually they're coming in pretty strong. The 15 is a little bit more arbitrary. I mean, you could use the 8, you can use the 15, but you need another level to use once the stock price gets away from the VWAP. So I use the 15, and it's So a lot of them will be when the 15 gets breached. It just depends on the price action that day. And if the stock, if on a choppy day, a lot of times you're going up and down through the VWAP. On more of a trending day, you tend to end up using the 15 a little bit more. Okay. Okay. All right, so again, this is some SPY super system trades, just so you can see. This was before I had the simple template to just show you what you really need to watch. The SPY super system trade, current time frame momentum. See, it went red here to blue. This was the buy. As it broke above the VWAP and the 15, you take it there, you ride it up. The 15 becomes your stop, the green line. And when you start to reverse, you get out. I took profits right here. That was a trade I took back in August, $220 per profit per contract. That's a lot. Typically, your SPY super system trades are going to generate anywhere from $70 to about $150 a contract on the SPY or the Qs. This was another SPY super system trade. This was, I was in for 2 candles. Get in here on a breakdown below the VWAP as we went red. Get out right here as this, I put in a big tail on this and I get out. All right, and then it comes back up again. Now I wouldn't have taken this long here as it went. See how it went to blue? I wouldn't take this long because I was coming up on the VWAP. That's a resistance level. I don't have enough room between the 15 and the VWAP. Right, and again, here's the same thing with the modified layout. This is all you need to follow. Makes it simpler to see if you're trading that. And you can flip these back and forth during the day if you've got the SPY Super System software. Okay, another one here for the SPY Super System software. Here's what I would have taken the trade. I couldn't take it here. See how it was yellow? I probably could have because the momentum was coming down, but it was still pretty high. It's very high on the chart, but this was actually the perfect entry right here. You take it and you get out right there. Right, that's all you're looking at. 15 break, pop out of the box. Here's your multi-current time frame momentum. And this was another SPY trade here. This was before I had the bottom oscillator on there. But again, you can see where you get here. I'm just kind of show you the setup. Everything was great. I mean, obviously the institutions are buying the heck out of the SPY this day on a 5-minute chart. Just try to find your best entry. Here's where it is. Pop over the 15 right there. You take it and you ride this thing up. And this was $130 profit per contract. That's more normal. Another one here. Went from yellow selling to blue buying. You die it right here. Get in on this candle. You might not get in at the top of this candle. So you're probably down a little bit of money on this candle, but the 15 becomes your stop. And you just stay in this thing, stay in this thing, stay in this thing. And then you finally get out when it starts to reverse, $90 profit. And again, that's the IWM. It's not as volatile as the Qs of the SPY. This is a beautiful SPY super system trade here. $120 profit per contract on the IWM. See the compression? See the breakdown? Look at the colors. Institutions are selling the heck out of this thing. They're definitely selling the IWM. And you get it here and you ride this thing down. And again, that was $120 profit per contract as a reverse right there. See, it went back to blue as the institution started to come back in again. All right, another one here. So these, I'm not going to go over on one of these charts. Blue, right? Pops out of the above the VWAP of the 15. Take it there, ride it up, and you can just stay in this thing as it stays above the 15. $150 profit. Right, here's some more to see, just so you can see where these entries should be. We went long here. You see the blue went from selling to buying. Let's see where it went to. It went right to the VWAP. I can't take it there. Here's another one, a doji right on the VWAP. I can't take it there. Here's where I would take the trade. Broke above the VWAP. Everything's blue. The institutions are buying it. I get in and I ride this thing up. Then I'm out right here. Right. This is when I took both ways. I took the SPY to the downside this day. It was a choppy day. I took it to the downside right here. Institutions are selling. You can see them selling. Red, red, red here. So I take it here off this break of the VWAP. I take it down. I get out as it starts to reverse. I wait for it to go back to buying again, which it did right here. All right, so I take it long right here. I didn't take it here. This was red. I took it blue right here. I take it here and I ride it up till it gets to the pivot point, and I take profits right there. So this was, I got it, made profits to the downside and to the upside. I don't do that a lot. All right, so you can just, so you can see these setups, you can see the colors, and you can see the move here, okay? Coming off the 15, perfect entry right here. It goes yellow, boom, you take it here, you ride it right down. Now, this is some of the recent trades we've taken. This is not SPY Super System trades from SPY Super System methodology. This is off the SPY Super System charts, but these are daily charts. These are going to be swing type trades, right? So these are ones recently. We had this SMR. You saw that on the results. And I showed you this one earlier. See it right here where it went green, multi-time frame, current time frame, all green. Go buy it. You buy it right here. It was after earnings. You ride it up, and we took that off after 2 days, I believe. An SMR. Nike. This is the Nike one I was telling you about. Here's where we took the trade right here on the 28th. Look at the selling. Institutions are selling the heck out of this thing. This is where we took the trade right here as it broke down. All right, breaks down. We rewrote it and rewrote it, and then we got this flushed down on tariff day, or that whatever that day was that they called when they put the tariffs on. And then you notice what it did when the tariffs come back, paused them, headed right back up again. Big, huge profit there in that one. So Repta, we took this one also over here. As it was coming down, it was selling off. We took it here as a compression broke. We rode this one down, took a nice profit in Sarepta. This was one in HIMS that we'd had. These are Heiken-Ashi candles right here. This is where I took the trade. I actually missed it. I should have had it back here. By the way, this VWAP is not effective on the daily chart. You don't want this on. You don't pay attention to it in your daily chart. I don't think you can take it off on toss on just a daily, but I don't use it. So this is where I took the trade here. 25% profit. I did leave a runner on. I made 269% of the runner, but I didn't include that in any of my results. That's just I left a couple of contracts on and it took off. All right, Palantir, nice one right here. See, yellow, green, breaking out. Take it right there. Get out right there. 31% profit on 2 days. That's a swing trade. Lulu, beautiful short for us here. This was earnings. Usually I wait after earnings for the stock to settle down a little bit. It came down and went compressed here. We took it here. As you notice, this was blue right there, and then it went yellow, selling. Selling is yellow is bearish. The current time frame momentum was already red on the daily chart. Took it here, get out the next morning, went in for 192 a contract, come out for $300 a contract on 56% profit. This was an intraday trade on Amazon right here, by the way. You notice the current time frame momentum went from yellow here to green here. I took it right here as it broke above the 15 and rode this one up for 45 minutes, made 32%. Obviously, the institutions were buying here. This was an ENPH, another older trade that we took. Compression, breakdown right there, 20% an hour on ENPH. Selling the heck out of this thing. When there's a lot of selling, what you're doing is you're looking for a level to try to get your best entry. Right, here's Verizon. This was 50% profit in an hour as it came across the VWAP, broke down right across the board. Okay, that was another really nice trade. And this was Tesla. This was an overnight trade we took. Everything was red on the 5-minute chart. The daily was already bearish. We decided to take some puts on Tesla, and it fell from 120 to 112 overnight, gap down, took a nice profit on that. Okay, so that covers the charts. That covers the SPY Super System software, which is what drives the results that we've had. That covers Heiken-Ashi. And again, here's just a recap of the trade methodologies we use. Straight calls and straight puts. We're in NVIDIA and Dell right now on straight calls. Straddles and strangles I do quite often. Debit spreads I do quite often. Time spreads I do when earnings are coming out. We did two this week. We'll be starting to do a lot more of those because we're heavily into earnings seasons now. And weekly ATM, I have a video on that. I have videos in all of this. And we do credit spreads. I did a credit spread on Tesla this week. 1 day credit spread, in 1 day, out the next, for a 35% profit. And this SPY Super System, again, these are trades that you have to be responsible for yourself. These are very quick trades on a 5-minute chart off the SPY Super System typically for the IWM, the SPY, or the Qs. But you can also trade. You can trade stocks like that if you want, like Tesla or Apple, or you can trade the Qs, the futures, NQ, ES, whatever you want to trade. You can trade gold and silver like that as well. All right, so that's the strategies we use in the room. All right, so I'm going to talk to you right now quickly about what the Right Line is offering. They've got some These are like the best offers right here. If you want to do any mixes and matches, you can call Rory at the office and he'll go over other options that you have. But basically, first of all, in the chat box here, you should be, yeah, in the chat box is the link to the special offers right here, which you can just go in there and do it directly. Also in the chat box is Rory's number. But the three situations here is you can get a free week trial, which is going to give you the alert service, and it's going to give you access to my trading room for 2 weeks. Okay, and you're going to get the bonuses, which is all my videos on how to trade SPY Super System. It's got the 11 most common mistakes traders make. It's got a video on Heiken-Ashi candles, on straddles and strangles, all the strategies that we use. And then after 2 weeks, it rolls over to $3.96 a quarter after 2-week trial. Now, if you want to get a better price, what you've got here is a one-time payment. This is you buy this. This is once. You buy it once, okay? And you're going to get the master classes. Obviously, you get the alert service, and you're going to get a Discord room right here. Now, this thing here, this last one here, same price, $24.96. This one here is really a pretty spectacular deal. This includes the SPY Super System. This is going to give you the SPY Super System forever. You don't have to re-up for it. You get it. You get the software. It goes in your Thinkorswim program. You don't pay for Thinkorswim. You can just download it. Software. Rightline will put that on your chart for you for free. It's all included in the price. They'll put it on for you free. You also get access to my live trading room forever, and you get obviously the Discord channel where we have 2 other professional traders, and you get all get the videos. So this is like the best one that there ever has been. $24.96, which is really outstanding. Normally that's what you get for just the room and the alert service. Now, if you want to get something different, if you want to get like a year or some other length of time, if you just call Rory and talk to him, he'll do mix and match for you. But I just wanted to show you what the best one. This one right here, we're doing a lot of people getting this because they get the software and they get the trading room forever for that price. And you see what these are producing right now. And then you can use the software to your own SPY Super System trades on the SPY, the Qs, the IWM, the futures, whatever you want. Right, so that is the offer that ends Sunday. Rory's number is right here, 786-732-4656. Really a good deal. I do want to show you one other thing, and that is I want to show you I have some scans in here. This is called the cascading up. I have one for when you get the software, this comes with a cascading up daily. That's what that is. Cascading down daily. There's also a cascading up on 5 minutes and a cascading down on 5 minutes. These 2 scans show you relative strength, cascading up, relative weakness with cascading down. And then I have this one wise bull that I'm getting ready to release, which is going to show you potential swing type trades, right? So if I switch this over here, if you just click on these, it's going to bring it up on the chart for you, and it's going to show you, well, here's AEO. Do we want to trade it long? No, we don't. See the yellow right here? Don't want to trade it long. Look at Bloom Energy. Yeah, big move in Bloom Energy, bullish as heck, green across the board. So all you have to do is click on here, and it's going to give you the information on your SPY Super System on whether it's tradable off of the institutions or not. See that? PCG, not tradable. You've got yellow here. UEC, tradable. ABTR, not tradable. So we'll give you all that information. MP, a beautiful setup here on MP, by the way, also tradable. And here's coin to the short side. Would you take this short? You would not. Current multi-time frame momentum is still green, so you can't go short on that. Right, and here's some ones for swing trades. That one looks good. Fix looks good. SAI looks good. GEV, which is a GE Vernova, that's been very strong lately. Notice the green. So all this, the software, if you get the software, I have this up in the room all the time anyway with these running. So if you're in the room, you're seeing all of this, and we're talking about all these different trades and all of these indicators and how to use them. All right. So I just kind of wanted to show you what's there for you. And there's your offers. I take advantage of some of these, at least to trial it if you want to see what's going on in the room. But this one here is a no-brainer to me. $2,500 for the software and the room, for forever. All right. All right, that kind of covers it. See if we have any questions. And again, the link is in the chat box for the to sign up for this. And I look forward to seeing some folks in the room on Monday or on the alert service on Monday. And have a great weekend. Thanks so much for attending. I really appreciate it. Thanks for all the questions and very good attendance today for Saturday. And like I said, I know people that are here on a Saturday are serious about becoming better traders. And I find those are folks that are much more likely to take action to do something to help their trade. All right, so have a great weekend, everybody. Enjoy your weekend off. And hopefully we'll see you some folks back in here on Monday. Have a great one.